Okay, folks, welcome back. This is our daily upload for Monday, July 13th, 2020. All right, so we are looking at the dollar index on the left-hand side. And I mentioned in the weekend review and commentary for this coming week that for the dollar index, I didn't want to see it trade back to its discount end of its daily BISI, and I wanted to see it if it was going to open up relatively unchanged and spike up and then reject, go lower, or gap down, fill the gap, and trade lower. It left a little bit of the gap in here and came back later on and then had a breakdown. And then we moved to these lows over here. At the same time, we've seen the euro dollar move off of its structure that I outlined from Sunday's review. We came back down into this little area, but didn't come quite down into the fair value gap with the order block. It did that later on, then rallied back up into consolidation, which is a breaker because you have a low, high, lower low than the previous low. There's going to be accumulation there. We see that happening here. And in a 5-minute time frame, you'll see there's an optimal trade entry for the New York session, 8:30 a.m. and market protraction up into a previous old high. So I'll add the annotations now. So here's the gap. The market gaps down, comes up, fills it almost, starts to trade lower, runs the low here. Retracement, expansion up, running short-term equal highs, filling the gap, note the bodies of the candles. And we also have in here, this is an optimal trade entry on a 5-minute time frame, so I'll leave that for your own study. And it's also here as well. Okay, so look at that on your 5-minute chart. Then the market creates an imbalance in here. So this is a fair value gap in the form of a SIBI, sell side imbalance, buy side inefficiency. That one single candle right there. Okay, it comes back up, closes it in almost about 95%, trades lower, then comes right back up into it again, closes it entirely, then distribution. This low comes in at 96.39, 10 pips below that takes us to 96.29. You can see the bodies of the candles respecting that. And then, true to form with the current environment, it trades right back up into the consolidation. So again, as I outlined, you have to be a scalper, you have to be nimble, take your targets below old lows on shorts and take your targets above old highs when long. And there you go. Okay, you see that trade that was entered today. It was in here on a breaker. All of these consecutive up close candles, let me zoom back in a little bit. All of this right here is a bullish breaker. If we trade through it, it does here. It doesn't need to move far away from it. It just needs to go above it. And then consolidation in there. Optimal trade entry on a 5-minute chart. I'll show you that in a moment. And the market trades up in here. You can see when it hits that, that was when my limit order right at the old high. Now notice it only went a little bit above the old high here. Okay. Above old highs, be nimble. And it just went a little bit more and then had a deep retracement back into this fair value gap right there. Okay, so I don't know if we're going to press again a little higher or if we're going to stay in consolidation on this. Just, I don't care. I took a little bit out of the marketplace. I showed how we can get a 25 to 30 pip trade. I got 36 pips out of this one in here. And just a really nice overall framework based on what we outlined on Sunday's video. Again, the signatures were we had the gap down on dollar, came back up, filled it, and then created an imbalance. When it does that, we're heading into the New York session right there, 8:15 and then 8:30. We're in a fair value gap there. I'll take this off so you can see what I'm referring to. That one single candle right there. It rebalances and comes back into it again, completely closes it in on this candle. Then distribution, running the sell side liquidity 10 pips below that low, and then a deep retracement back in. So again, it's just one more testimony to why this market is a scalper's market, and if it's not your cup of tea, you're going to have to be very patient. There's a lot of emails coming in saying, look, can you show me how to do something with this or that? The market has to give me those frameworks to work with it. Otherwise, this is what we have to do. And I know it isn't what you want to hear, but it's the truth. So you're going to have to accept it and forge more patience, or just be, I guess, frustrated. And I get it, I understand, but there's still opportunities here. plenty of opportunities, but you have to be very nimble and short-term in nature. So I'll talk to you tomorrow. Until then, I wish good luck and good trading.